What a mess, folks. What a mess indeed. It's a bloodbath. Tesla down 5+ percentage points again here today. Snowflake down over 5%. Intel down nearly 5%. Adobe down nearly 5%. Palo Alto Networks getting hit hard. Oobity Booba stock down 4% plus here today. You have stocks like SoFi down double-digit percentages here today. SoFi down over 11%. The Hood's getting hit bad, over 5% down there. Affirm getting hit. Square, Coinbase, even the mighty Bitcoin is down today. Holy smokers, this is no dang jokers, folks, okay? Got a few things to get in today's video, okay? First thing, we're just going to talk about the damage that's going on out there, okay? Second thing is, I want to explain something very important that everybody understands. The scary part of melt up to meltdown. Okay, and I want to explain that on a high level in this video so everybody kind of understands how all these asset classes work together and what happens when certain things go certain ways, okay? And the third thing we're going to discuss is how long is this going to last? Because I think a lot of people are looking out at some damage like this and like, okay, is this one of these situations where this lasts like a day, a few days, a few weeks, a few months? Is this like, going to be the remainder of this year? What are we looking at here, okay? And I want to explain how you can tell if we are in something that's going to just be very short term here and then we're past it, or if this is something more long lasting and a sign of like, oh, we got some actual real damage here to happen in the market, okay? So I hope you guys really enjoy this video. I appreciate y'all joining me as always. Got a brand new workshop for you guys. I recorded that last week. How much money you need to retire, quit your job, all that good stuff. Even though on a day like today, you probably feel like you might never be able to retire, but that's okay, okay? That's a free workshop. It's going to be pinned comment down there. All I ask in return, smash a like. Make sure you're subscribed to the channel, folks. If you haven't already hit that subscribe button, make sure you do. Hit that like button. And as far as my health goes, this is the first day I'm going to work a full day since Wednesday of last week. So yeah, definitely on the right trajectory finally at this point in time. So pleased about that, man. It was about the sickest I'd been in a long, long time, okay? So, whoo, baby. Let's start it off with Tesla. Look at that year to date. Folks, it is March. Not only is it March, it's the beginning of March. And Tesla stock is already pushing close to 30% down for the year. This is a disaster. Let's talk Tesla. Okay, so the stock is down 28+% year to date. It's brutal, right? Now, I spoke last night or yesterday on the reaction channel about obviously what's going on the legal front in regards to Tesla and that whole messy situation, right? We spoke about that. But on top of that, you're getting other problematic things like this, okay? Tesla shares fell on Monday after data showed China Passenger Car Association showed deliveries for its Shanghai Gigafactory at their lowest point in more than a year. The Chinese Lunar New Year celebrations in February hurt sales, also increased domestic competition. Tesla continues to use price incentives to boost sales, but Chinese manufacturers such as XPeng and BYD are matching strategy. So obviously there's a price war going on. All of us Tesla investors, we already know that. We know there's a price war going on. This is not new news for us, right? It's just the fact that the price war is not over. It's still going on. It's ridiculously cutthroat competitive over there, and it's not showing any signs of calming down. And it shows that, sales are not in a good place in regards to China. And so Tesla remains in the hurricane. As bad as, some people want it to get out of the hurricane, we're remaining in the hurricane. And every time you think it's clear skies, really we're just not in the hurricane again. And then we get hit with something else and something else and something else. And so that's where Tesla's at right now. We're going through it. We will get out of this thing eventually. This hurricane will end eventually. But for right now, we're just still going through it, man. And it's been, certainly hasn't been the most fun unless you want to buy Tesla shares. If you're an acquirer of Tesla shares, you're loving this. You're loving, you would like as many hurricanes to hit us right now as possible, right? Because you're looking to acquire shares. But there's other people out there that they're not acquiring Tesla shares, but they hold Tesla stock and they're like, kind of want it to go up, right? And it's just, it is what it is. We will get out of this. It's impossible to predict exactly when. Maybe it's, this comes to a close in the next few months. Maybe we have to wait 6 months. Maybe we have to wait 12 months, but we will get out of this hurricane. That I do know, okay? Speaking about hurricane, Snowflake stock, look at this baby, down another 5.4% here today. This stock is now down 13.6% year to date, when tech has been really strong this year, right? And yet a stock like Snowflake continues to just perform really bad. And I can't touch Snowflake, between the high valuation and then those growth rates that have fallen off a cliff. I'm like, oh my gosh, I can't touch Snowflake. Intel, look at Intel, down double-digit percentages already this year, down another 4% plus here today. And it's just not having fun at all. Like NVIDIA, AMD stocks are two of the strongest in the entire stock market this year, right? And then you have Intel that just cannot do anything right for that stock. Look at Big Dog. Guys, look at Big Dog. Big Dog is down over 9%. 9% this year. You could be flipping my flapjacks. My gosh. The Big Dog is actually falling. And this is despite the Qs having a good year, the NASDAQ having a good year, S&P 500 having a good year. And yet Big Dog just can't do anything. Apple, man, that's incredible to see Apple this week despite this market. This used to not, be even thought of as possible. If you said Apple stock down 9% year to date, and you said, okay, what's the S&P 500 year to date? Somebody would say probably 7 to 12% down for the year. And yet the S&P 500 is having a good year. You'd say, okay, Apple stock's down over 9% year to date. What's the NASDAQ this year? NASDAQ's probably down probably 9 to 12%. Right? That's what you would say. So the fact that we have a complete opposite trend is a little bit of a sign of, let's call it a new market, a new paradigm, right? Google McDougal is having a really tough year, down over 5% year to date. But the shocking thing to me about Google is it's fascinating that stock's doing better, if we can call negative 5% for the year is better than Apple, right? When you consider how much negativity there is around Google right now, which there's sky high negativity around Google, yet the stock's performing better. And I go back to, why is Apple continuing to be so weak? Something's going on with the stock. Is Buffett selling? I keep talking about that. And if we get more data that Buffett sold a ton more shares, there's been no one that has talked about this other than me. So when everybody comes and, if we get some data all of a sudden in a few months that shows Buffett was selling, remember who's the only freaking guy on the whole damn internet that was talking about this, okay? That's all I'm saying. It's too fishy, the fact that this stock sells off day after day after day, when forced money is being put into the stock every day through index funds, right? Through the weighting of the market, and through the buybacks of Apple, and yet that stock does what it's doing. Something's fishy. Oh my gosh, the slaughterhouse is back. Oh, yes it is. Check that out. SoFi down 12%, Hood down about 5%, Firm down big, Square down, Coinbase down, Upstart, Rocket. PayPal's the best stock of the bunch, down 1%. I mean, this fintech had been the slaughterhouse for a long time, and then it was finally getting footing. Obviously, Bitcoin price has been kind of helping this situation out, and just kind of less worries about the Fed raising rates, things like that. And so fintech had been catching some ground, but man, it's giving back a lot today. I mean, SoFi pushing all the way back to 750. Jeez. Now, check out the Dow 30. Pay attention to this, okay? Look at this. The Dow 30 worst stocks. I wanted to look at the top 5 best stocks and worst stocks. The top 5 worst stocks, guess what they all have in common? They're all tech related, right? Intel, Salesforce, Apple, Microsoft, Amazon. All you'd put into more tech category. On the flip side, this is really fascinating. Look at the top 5 best stocks in the Dow 30 here today. Check this out. Oh, 3M, Walmart, Chevron, JP Morgan, and McDonald's, as we used to call it, Mick overvalued back in the day. The top 5 best stocks, all non-tech, right? So, fascinating divergence you have going on out there that shows it's not a whole market that's weak. It's specifically tech that's weak here, okay? If I look at even some stocks in my portfolios, I have some stocks that today you wouldn't even know it's a bad day for a lot of these stocks, right? Target, if I just look at my Target position, I would think today's a great day in the market. Target's been up anywhere from 10 to 12% today. So interesting to see Target so strong. And I did hear they're going to start kind of like a premium subscription type service, which is smart kind of to compete with Amazon Prime and Walmart's competitive product there. I think that's intelligent of them. And then you see Cheesecake Factory, right? Interesting. Cake's having a very good day. So you look at stocks like Target, Cheesecake Factory, Walmart, 3M, Chevron, these sorts of stocks, and you wouldn't even think it's a bad day out there. You'd think it's actually a good day. Now, understanding that tech's having a really tough time here, you got to assume the king's fallen, right? The king must have fallen today. It must have fallen. That's why we're getting all this damage out there. And that's why you got Bitcoin down and all these tech stocks down and everything like that, right? The king must have fallen. And we know who the king is. That's NVIDIA. What happened to the king? Come on. 0.7% down, 0.7%. The king has fallen. Are you flipping my flapjacks? It's unbelievable. It's unbelievable how strong that stock is. Oh my gosh. Okay. Now let's talk about meltdown scenario, and then we're going to get into how long is this going to last. Okay. So this is very important. Everybody understands this, right? Because when you're in a melt-up market, which we've been in a melt-up market for quite a while, it's led by mega cap tech. Okay. And this is how the market works nowadays. And if mega cap tech does well, then what ends up following after that is speculative tech. The indexes then also follow. Bitcoin also follows. And then altcoins follow. And all of these kind of go up and up and up. And as they all kind of go up, they push each other up more and more and more. And it becomes this kind of like cycle of just beautifulness. And it all really comes down and starts. It all starts with mega cap tech. That's where the whole story starts. And if we go back all the way to the fourth quarter of 2022, right, mega cap tech bottoms and starts going up. And from there, it just pushed out and broadened more and more and more. And you get into this melt up cycle. And it's beautiful. When you're part of this cycle, it is so much fun because it just seems like your stocks just go higher and higher and higher. And it seems like just everything's kind of pushing everything up. And it's just like, it's a grand experience. But this doesn't just work upward. It also works downward. It's what's called a meltdown also, okay? It's the same exact thing, but we're going in reverse now at this point in time, right? We're going in reverse. So mega cap tech goes down. That pushes more speculative stocks down even heavier. Look at today. Look at what's happened with tech stocks. Then look at what's happened with more speculative related stocks. They're getting hit even harder, right? Indexes get pushed down. Bitcoin gets pushed down. Altcoins get hammered, right? And it becomes a self-fulfilling prophecy. Now, a great example of this, right? Excuse me. So we've had two perfect examples of a melt-up market and meltdown market in the last few years. And in terms of the melt-up market, a perfect time period to look at that would be April 2020 through April 2021. There was a perfect showing of what happens when you're in a melt-up market, right? And it's like mega cap tech was going up, then the speculative stocks going up, indexes were flying, Bitcoin pushed higher, altcoins pushed higher, and the more things kind of boomed, the more speculation got into the market and those sorts of things, right? And it's a lot of fun to go through when you're going on that up cycle, right? But then there's the meltdown. And a perfect example of the meltdown was November 2021 through November 2022. We went through a big meltdown, right? Mega cap tech started going down. Mega cap tech all peaked literally in November 2021 and then started going down. And then the more speculative tech started getting hit really hard. The indexes started getting hit really hard in general, right? Bitcoin obviously got destroyed. We know that. Altcoins, they all went to almost nothing. It was brutal. So those are two perfect examples that we've gotten in recent years of what it is like to be in a melt-up market versus meltdown market. And in those meltdown markets, it's amazing from the perspective of you get to buy some assets at some prices that you just couldn't even imagine, right? In a melt-up market, some of your assets are going to go to some prices that you're just, I can't even believe this stock is at this price or this asset's at this price. I needed to go ahead and take some profits here, right? And so there's beauty behind the madness, but underneath, both are very ugly. Both are very ugly, okay? So here's the deal, okay? Let's say hypothetically, let's play a game. Let's say we have a big meltdown for whatever reason. Let's say the NASDAQ goes to 10K. That'd be brutal. From 16,000 where it's at right now, nearly 16,000 to 10K. Here's where these assets would be at, likely. Bitcoin would be at about 30K in that sort of situation. S&P 500 would be at about 3,400. Dow would be at about 30,000. And everything speculative would have gotten absolutely crushed in that sort of market, right? So you just got to understand these markets work both ways. The melt up can turn into a meltdown. And, the fun of making money every day can turn into a nightmare of, oh my gosh, my account goes lower and lower and lower every day. And so you just got to understand, you can't just say, I only want the melt up and never the melt down. You're going to have them both. You will have them both. That's just the way the market works. Okay. And so, something you just gotta, take that into account because all these things kind of work together nowadays. Okay. Now, we'll talk about how long this whole situation is going to last. How long are we looking at here? Okay. So if you're going to get a long-term drop in the market is many months, or let's call it 1 year plus of a, dropping market. You only get those markets one of two ways. One way is through an unemployment cycle. The second way you can get a long-term market drop is through a Fed hike cycle. Okay, so unemployment cycle, perfect example in recent memory would have been the Great Financial Crisis, right? A perfect example of Fed hike cycle would have been obviously 2022 and what happened in the market, right? That lasted more than a few months. That was many, many months. That was almost a year of damage going on there, right? So that's how you get a long-term market drop. Now, short-term drops, anything else can drop the market for less than 3 months. Anything else, overvaluation, geopolitical worries, elections, potential tax implications in terms of tax rates changing. There could be a million different dynamics that can drop the market for a few days, a few weeks, or even a month or two. But all of those other things never are lasting. They never last. They're here and gone. Even Rona shut down on the global economy, right? Even that was less than a 3-month drop. Let that sink in for a moment. Even Rona, how serious that was. Less than a 3-month drop. So in order to get longer than a 3-month drop, it has to be unemployment cycle, a major unemployment cycle is going to happen. And I'm not talking about unemployment cycle like Rona had. That was like a fake unemployment cycle. I'm talking real like GFC, right? Or some of the others we've had in the past. Or you got to have a Fed hike cycle. That's the only way you can get a long-term drop. So you got to ask yourself, okay, what type of situation are we in here? Okay, well, let's talk unemployment. So if we look at unemployment, as of right now, we're at about 3.7% unemployment rate. That's been pretty consistent over the past few months. So as of right now, we don't have any signs showing of unemployment rate going up in any substantial way. So as of right now, unemployment's looking pretty dang good. Now, that could change. Maybe 6 months from now, 12 months from now, 24 months from now, that's a different situation. And we are going through an unemployment cycle, and that can hurt the market significantly. But as of right now, we don't have any signs that we're going through an unemployment cycle, okay? If we look at weekly jobless claims, very important number. Once again, if you want to look at it and try to see like, we're about to go through a big unemployment cycle. As of right now, at least, we are not seeing anything in weekly jobless claims that make you say, oh, big unemployment cycles here. Once again, 6 months from now, 12 months from now, 24 months from now, 36 months from now, it could be totally different. But as of right now, there's no signs of an unemployment cycle going on out there to have some sort of big drop in relation to that. So right now, we can check that off. Unemployment cycle as of right now, at least, we don't have that, right? So what about a Fed hike cycle? Well, in order to get a Fed hike cycle, we need inflation to spike huge again, right? And we need the CPI to go back above or near where the Fed funds rate is right now. Fed funds rate is, what are we at, 5.25 or 5.5 right now, Fed funds rate, right? So we need CPI to head back toward the 5 range if that's going to happen, right? Well, as of right now, government data is at 3.1, and that's a lagging indicator, which is likely too high as well. True inflation is at 1.59%, which is well below the 2% Fed target. And I've always trusted true inflation more than I trust the U.S. government numbers. True inflation had us at about 13% inflation rate back in 22 when the government numbers had us, I think, maxed out at 9%. And I felt like the reality was we were in double digits. I thought true-flation was more accurate. I think true-flation is more accurate now than the U.S. government numbers. But the U.S. government numbers, what everybody's paid attention to, so that's fine. But as far as what true-flation's showing us, like no signs of, oh my gosh, like inflation's a big problem right now. If we look at GSG, commodity index, in the past year, it's up 2.47%. 2.47%. That's nothing. Nothing. That's beautiful. If we look at a 6-month of GSG, it's down about 5%, a little less than 5% in the past 6 months. So if you look at it from the true-flation side, if you look at it from the U.S. government number side, if you look at it from the commodities and what's going on, because remember the world runs on commodities, we're seeing absolutely no signs of, wow, we got a big problem in inflation. The Fed's going to have to come in and start raising rates like crazy again, okay? So that just checked off a Fed hike cycle. So as of right now, we have no signs of an unemployment cycle. We have no signs of a Fed hike cycle, which means we have no signs right now of a long-term drop. So which means we're in a short-term drop, right? Something, is going to happen here where the market's going to drop for maybe a few days, few weeks, maybe a month or two, and that's about all she wrote in regards to that. Now, let's be honest, the market's been rolling. I mean, check this out. This was as of, late October, right? The public count was like 1.5 mil, somewhere around there. And it climbed all the way to 2.2 mil plus at the peak just a few days ago, right? That's about a $700,000 gain in about 5 months in the public count, right? It's an incredible, incredible move. And, when you've made a move like that, you're going to need to take a breather. You're going to need to take a breather, right? I mean, that was quite a move there. And at some point in time, you're going to have a nice pullback. And sometimes it lasts a few weeks, sometimes a few days, sometimes a month or two, but you need a pullback. And then that gives everybody time to reassess their situation. It gives time for the bears to reassess their situation, say, do I want to stay bearish? Do I want to flip over the bullish side? Do I want to go neutral? It gives the bulls time to say, okay, do I want to maybe take some profits now? The stocks haven't moved up. They're moving down a little bit. Do I want to take some profits? Do I want to deploy some new capital in some new positions? It gives everybody a moment to have some time to just think. When the market's doing nothing but seems like going up or going down, you feel like you don't even have time to think. It's just moving so fast. Oh my gosh, you just have to kind of react, right? This actually gives you a moment to sit back a little bit and say, I think I'm going to go ahead and, take some profits in this stock over here. I'm going to go ahead and deploy some of that money into this position. I'm going to go ahead and reallocate some of my portfolio into some of these stocks that have been hit, over here that have not been performing with the market while these ones have been performing phenomenal. I think there's going to be catch up here. I think there's going to be alpha here, and you can play that game a little bit. But when, that's why these markets are, this situation, it's like halftime, man. You need a halftime. There's a reason there's a halftime in a game. You need a moment to catch your breath, get some fluids, and kind of figure out where you're going from here. And so, everybody fears these sorts of situations. I say welcome it. The only thing I'll say is just make sure you got your seatbelt on. Make sure you got your seatbelt on, baby, because it's always a fun ride, and you just got to learn to enjoy it. I've been in the market so long now. I just enjoy all this stuff. The ups and the downs and the $50,000 plus days up and down and all around, and the $100,000 days and all those things. You just got to enjoy it. Strap on your seatbelt and go for a fun ride. And it's like being in a Formula One car, and you're driving around the track like crazy. It could be a lot of fun, but make sure you get your seatbelt on while you're doing it, right? All right, guys, appreciate you joining me. Thanks so much, as always. Make sure you get my workshop down there. It's absolutely free. To access that, pin comment down there how much money you need to quit your job and retire, all that good stuff. Much love, and have a great day.